can screw this up for you, okay?
Yes, sounds good. Sweet. So I'm gonna get recording started. So in respect of other people time, we're gonna get started with this, and we're gonna be sending out the recording to our database over here. And we're also gonna be posting this sometimes onto our YouTube channels as well. But if you can't wait, this is the session you should be joining. Awesome. So today I have Kinetic here. Kinetic is a cryptocurrency advisor, right? That's the right intro for you. And then I'm going to have him introduce himself.
Yeah, hi, my name is Ken Bringle. I'm CEO of Mountain Crypto Advisors. They call me Kinetics in the community that I spring forth from. So that's the community that I'm well known in. We've got, I think, just under 11,000 subscribers on YouTube with one of our channels. We're starting a brand new channel called E3 Syndicate, a lot more focused on not just crypto, but personal finance as a whole, and educating people on financial terms. I quite honestly thought more people were up to date on, even within our own community. But as our community became, I mean, we saw close to 10,000 new crypto millionaires be made over the last 2.5 years. Realized that a lot of those guys didn't have the financial background in the way of understanding to know what to do going forward. And that's part of the reason we created Mountain Crypto Advisors. So I don't know if I personally am not an advisor of any time. I'm not Series 6 or Series 7 licensed, but I do have quite a bit of a marketing and operational background, and I come from insurance. So.
Yeah. So Ken and I have met each other on some other event, and I start talking with him about crypto stuff. And then he kind of tells me all these great ideas of where, the crypto investment is just one type of investment, but the key is kind of how do you actually tie it all together, and then putting the tax and all that stuff together. So I was like, hey, it'd be really great for you to come to us on the webinars and etc. Just kind of talk about this. And of course, most our people who's at home still working, they are interested in this type of investment. And crypto is just kind of like this really foreign, this is the first time we do this. This is a very foreign concept for the people, most of my audience who is on real estate. So we thought it would be a really good idea to kind of just have this session with Ken and really ask all the questions we want. So to that, I believe my team has sent out some questions to ask for questions before the session. And we actually got a pretty good response over there. So Ken, if you don't mind, I'm going to start my questioning rounds with you. And because this is all about cryptocurrency investment, what the future look like, etc. So we got a lot of questions to kind of cover over here. And for folks who are joining lively, and if it's on Facebook, just make sure that we're not going to monitor in the Facebook on the questions. So just join our live link over here by clicking on here, so that we can actually get your questions answered live. So to start with, why should I buy crypto? Like, what are some of the reasons people buy crypto? Why should I buy crypto now?
Well, politically and philosophically, a lot of us got into crypto because we like the idea of a monetary system outside of what the federally issued fiat currencies were able to offer you. But it ended up turning into more than that. So cryptocurrency really failed as a currency. You don't see anyone transacting in it. There's those who are doing commerce using crypto, I think, are absolutely doing it wrong. They're wasting their time. You've got too many issues with volatility and slippage. But what it ended up being was something even better and actually more valuable. So if you look at, it ended up being a store of value. So if you just look at gold itself, we're at a $7 trillion market cap there. That's worth more than actual currencies, other than, I mean, over the last few years, they've actually inflated the monetary supply through fiat currencies worldwide. So it's a little bit of a skewed number now, but the amount of actual stored value, which is essentially what crypto has become through digital rarity. So I don't want to go into too many details here because I could totally just go off base, and I apologize for that because there's a lot of concepts here that I know a lot of your watchers probably aren't up to speed on yet. But really what it ended up being is a store of value that is a very speculative store of value. And the reason why I feel everyone should be investing in crypto is because, you don't need a lot of it, because where else are you going to find 10,000x returns, which is 1,000,000% return gains?
Yeah,
Well,
that's a lot.
in all of the asset classes over the last 100 years, unless you were, an early investor, VC investor, angel investor in something tech related that was a unicorn and went public, you're not getting those gains from anywhere else in
Yeah.
any other market.
So it's really kind of the accelerator for someone's portfolio when they kind of look into it. This should be like carved into like high risk, high growth kind of like a
Absolutely.
bucket on there. That's really
Absolutely.
great. So kind of leads into my next question. And for folks who is kind of listening, some of you know what fiat money is. Fiat money is basically just the currency that we have right now. And in the macroeconomic world, we kind of call it the fiat money. So how do you see kind of your crypto role as a follow-up to that question in one's full portfolio? And how does one decide how much to allocate to this particular asset?
Well, I personally like the idea of only investing. We say this all the time on our channel. Don't invest what you're not willing to lose. I mean, it's very, very speculative. And the problem with crypto is it's too easy. There's a lot of scams out there. It's too easy to invest in something that goes to zero. So, but I will say on the flip side, you do cryptocurrency right, you'll never need to work again or invest in anything else ever again. So,
Mhm.
I don't necessarily recommend that, but go back, ask me your question again real quick, because I know I'm getting off topic here.
No, it's great. So it's like how much then would you allocate it like into that bucket? Like for someone who's like normal, is there
Yeah.
a kind of like I know everybody's looking fast rules. There's no fast rules when you're allocating your portfolio, but how much would you allocate it yourself into your whole portfolio for this growth sector of
Well,
crypto
yeah,
investment?
going back to what I said originally, never invest more than you're willing to lose. So I don't know everybody that's watching this, I don't know their specific situations. So I don't want to speak on behalf of them what kind of, like, you hear a lot of guys talk about gold and silver, allocate 10% of your net worth. And that's fine, because that's just an insurance product.
Yeah,
Essentially is all that is. You're not investing in gold and silver because you're speculating that the price is going to go up.
right.
You're hedging as an insurance product, so to speak, that if a fiat currency collapses, you've got some spending power left.
Mhm.
This is totally different in that regard. If you're $100 million net worth and investing $10 million into crypto, seems pretty excessive to me, quite honestly. I
Mhm.
mean, it doesn't take a lot to make huge out earned or outsized gains. So,
Mhm.
if you're only worth 100 grand, 10% maybe $10,000. It just depends on what your
Mhm.
situation is. So it's really hard to say, hey, allocate this percentage to this portion of your
Mm.
portfolio. It's not like the same advice I would give if I were an advisor that were licensed to do so. It's not like the advice where I'd say, well, put this percentage into mutual funds, this
Yeah.
percentage into stocks and equities, and this percentage into bonds. Like it doesn't follow that rule. You just need to find legitimate products with the right philosophies behind them, and we can get into the philosophies here in a little bit. I'll
That's
let you go through your
awesome.
line of thinking.
Yeah,
Your
definitely.
questions
Actually, you
were.
just kind of sparked me having a question on this, which is like, let's kind of dive into legitimate products and the logics behind it.
Yep.
So obviously, people are very familiar with Bitcoin because that's kind of like the beginning of everything.
Yep.
Maybe not, maybe yes, I don't know enough.
Yeah.
But then I've also heard of Ethereum, Bitcoin, and then there's also other things like Hex and etc. So can you kind of tell me a little bit about Bitcoin? How is Bitcoin different than all the other coin, or is it? And then among the cryptos, what are some of the products? I know there's so many, but
Yeah.
what are some of the top 5 products that maybe you have your eyes on? Just personally, of course, this is not meant to for anyone to jump into. No advice. You gotta bet your risk assessments of it.
Yep.
But can like what are some of the out there that you like and the logics behind them? Yeah.
Yeah. So I'm gonna really upset a lot of people with this one, because I know there are some people out there that And they're doing it wrong, by the way. They hold Bitcoin on Coinbase or Gemini or one of these other centralized exchanges. And as we've seen in the last even 6 months, Voyager and Celsius and BlockFi, all of these different companies just absolutely go to zero and steal your money. You're doing it wrong if you're leaving it on a centralized exchange in the first place. So, but back to the very infuriating part I'm about to say is that Bitcoin's trash. So you don't want to, and if you've already had, I'm going to quote a gentleman that I really look up to. His name is Richard Hart. He says, where do you think the next outsized gain of Bitcoin is going to be? It takes so much economic energy with its market cap so high already to get those outsized gains. You might get a 3-4x over the next 4 or 5 years, which is great by regular market standards. But if you're in crypto and that's where your money's at, you're getting left behind. I mean, your market cap's so large already that you've already had the world's richest man buy. You got any more world's richest man sitting around trying to pick up some more Bitcoin? You've got nation states have already adopted it. To me, all the opportunity cost is already gone out of Bitcoin. Now, what I will say is, and I don't think it's still better than fiat currencies and most of the other things out there in the market. It absolutely, I think it's one of the best stores of value. You've got a digital scarcity that's provable, that there's not more coins issued than should be. That when you spend it, that same person isn't going to spend it to someone else, so there's not a double spend problem. And that's what we really give the homage to Bitcoin for. Is it solved what was called the Byzantine generals problem, where if you're a Byzantine general and you want to attack a town and you've got 4 armies on each side, how do you signal without signaling the person that you're going to attack that it's time to attack, and making sure that everyone is coordinated at the same time? So it's called the Byzantine generals problem, which is also known as the double spend problem. So you collecting Bitcoin from me, know that the Bitcoin I'm giving you is genuine and I didn't already spend it with somebody else. That's a double spend problem. And so Bitcoin, we owe a debt of gratitude. Our whole industry owes Bitcoin for being the first to prove that this is possible. So I'm not a big fan of Bitcoin. I think if you want to get left behind and earn less than other people that are investing in the crypto space, by all means. But I will say it does fit the other criteria that I do believe in with the crypto space. It needs to be trustless. It needs to make sure that it operates regardless of some trusted third party has to validate and make sure. So Bitcoin, Ethereum, and Hex, they're all Hex.com is all trustless. And I absolutely subscribe to that philosophy, that I don't need a trusted middleman to facilitate my transactions, including Coinbase and Gemini. I hold a wallet myself that I control the keys to, which is just like the super secret password that allows me to spend that doesn't allow an outsider to spend my coin balance. And so it's trustless, it's permissionless. I don't have to ask a federal government. I don't have to ask a bank. I don't have to verify through Swift that it's okay for me to send my money to you. I like things that are yield generating. In being an investment or a real estate investor, and you being a real estate investor, you guys don't do it just for equity gain, price appreciation only. You want some yield as well. Well, unfortunately, Bitcoin and Ethereum at this point in time do not do that. But Hex does at this time. So I like the idea of yield generating tools as well, all while being trustless and permissionless, being immutable code. I don't like things that have admin keys, and the reason why is because they're a bad actor. Even if they didn't intend to be, they have left an attack vector through code that someone could attack the chain or attack the product built on the chain, the token on the chain, and they can reorganize balances and validate coins, move it around, steal it out of your wallet. So I don't like things with that attack vector of the admin keys. I like things that are immutable, that are, once they've been deployed, cannot be changed. And there's a few things out there that definitely fall in that category. So part of the reason I like Hex, and Richard Hart is also creating Pulse and PulseX, which is a coin. It's an exchange, a decentralized exchange that I can permissionlessly trade my coins from one coin to another. Now, Pulse and PulseX do not exist yet, but I've got a track record from a founder. So when you're looking at these things, look at the track record of the founder. First of all, be very careful to not invest in things that the creator or the developer of the coin is anonymous. Very, very popular in our industry for the creators to stay anonymous. A giant red flag. There's a good chance that they're going to scam you out through either a rug pull or sell the price to zero. And there's a lot of, I can go through those terms here in just a minute, but part of the reason I like Pulse and PulseX and Hex is because the founder has 3 years worth of 100% uptime, immutable code that has never ceased to work. And he's got a track record, and it subscribes to the tenets of permissionless and immutable.
Mm-hmm. That's very interesting. That's very interesting because isn't it true that Bitcoin's owner is somewhat anonymous?
Yes. So, and I think it was necessary.
Yeah.
When you were going up against in the wake of the finance, so the Bitcoin white paper was created in 2008, right after the Great Recession started, right after everything crashed. And it was a proposal for a new monetary system and a peer-to-peer digital cash. Well, like I had said early, first of all, you can't run a worldwide currency with only 21 million. So that was the first problem that it had. Bitcoin doesn't follow its own roadmap. It needs bigger blocks, but then there's a centralization issue that can come with Bitcoin, with bigger blocks. So what it did is it became a store of value instead. And it's been very successful and is actually worth more than as a store of value than it is as a currency anyway. So it actually ended up accidentally becoming something better. But I think when you go up against world governments and create a new system, a monetary system outside of their fiat, the fiat system and the banking and the Federal Reserve systems that have been created very much benefit a nationalized government to use as a tool to be able to borrow debt and then inflate it and then pay it back easier. So those tools are great, but I think it was very necessary. Going back to Satoshi Nakamoto was his moniker, his handle. I think it was very necessary for him to be especially before anyone knew what cryptocurrency was, for him to be anonymous.
Yeah, that makes sense. So that's kind of anomaly. So a couple of the rules and tips that you just kind of give to us is, I love this because I'm always a framework person. So instead of asking question which currency to invest it in, it's like, what are the criteria for you to select a currency to invest it in? And then you just kind of rattled off some, like looking at the founders, they have to be kind of trustless, what you said, and basically the platforms or the ways that you can access your money should not have admin key. So just let the program kind of does itself, automate itself, because then without human interjections with that. So what are some other top tips that you come up with that will help you kind of evaluate a currency? Now, we kind of talked about a little bit about the founder when you selected a currency, what you should look into the founder, but like, what are some other things that you look for when you're deciding if I want to invest in this currency or not?
Yeah. Well, it's almost like I paid you to ask that question. What a great question. I really like that. Thank you so much.
And he hasn't paid me. So
yeah, right. Exactly.
It was not on the list of questions that I'm supposed to ask either. So
I think the ideal answer, so there's a few things to that question, but I think that probably the most ideal part of that is finding a coin or a project. I like product because product insinuates it's finished. Project means it's still in development. Usually means there's admin keys. So you want a finished product. But I like when they replace a product at a bank. If this is supposed to replace banking and this is supposed to make it possible for you and I to do commerce and transact peer-to-peer, then why wouldn't we replace the products of a bank? So currency is just one product of the banking system. And its biggest what is the right word for it? The thing that since we're in a Keynesian, I don't really want to. Do you think your followers are going to be very familiar with the Keynesian
Probably not, but maybe you can
Okay.
kind of explain a little bit.
Yeah. So the Keynesian economic theory is that the velocity of money is the right way to run an economy instead of buying and holding and storing your money and only
Mhm.
using it when you have enough to pay for things. It's very much the
Growth
idea
driven.
behind, yeah,
Yeah.
it's very much the idea behind the debt system that we have created now, that
Mhm.
borrow, pay for thing, or build businesses, invest, and then
Mhm.
pay that money back, and then do it all over again.
Mhm.
So with the product of currency through banking, it's very good for that Keynesian system, to be able to transact fast.
Mhm.
But it's not the only product that banks offer. In fact, I would say, what is the number two? Actually, so probably checking and savings accounts. And unfortunately,
Mhm.
all transaction, it's a catch 22. It's not necessarily, unfortunately, but at this point in time, and there's some proposals out there through Stanford right now of creating tokens where this will change things. Checking and savings accounts are going to be a little bit more difficult because you if I accidentally pay the wrong person, there's no way to get that money back. Like,
Mhm.
once I have sent that money is forever yours, and unless you are a nice, good person, or I don't even know who I sent it to on the other side, they don't have to send it back to me.
Right. It's
So
like,
there's
yo,
ways.
I made a wrong wire. Right now, you
Yes.
can kind of still trace it, but now
Yep.
it's like, nope, it's gone.
Now,
You
once it's
you have
gone,
to
it is
take full
gone.
responsibility. Yes.
100%. There's 100% responsibility when you're dealing with your own money through
Mhm.
virtual currency. So there's some technologies being proposed out there right now, some reversible transaction tokens that within the first 30 days they can be reversed, for chargeback purposes. So that, there are some benefits to systems like PayPal and credit cards where now you can reverse transactions and you can dispute them.
Mhm.
So in the meantime, some great products like the one that I like the most, that has been the biggest earner for me, was Hex.com.
Mhm.
What's beautiful of it is the third most popular, or actually technically the second most popular banking product, are certificates of deposit or time deposits. So you lock up your money for a set amount of time. You get a return on that for every year more that you lock up your money. You get about 20% more interest than you were before. Now, this is an interest because you're not giving it to a third party, but it is still paying a yield. So it's like a certificate of deposit or a time deposit on the blockchain.
Mhm.
So it's not exactly like one. And we can get into all the details about it later, but I don't think that's really here nor there. But going back to, what am I looking for in products? I want something that replaces a banking product, and this
Mhm.
just happens to replace the second most popular product in a bank right now.
Yeah. So you want to kind of essentially create a little bit economy by itself, but that the currency can be used outside just transaction, is what I'm
Yes.
kind of summarizing on, potentially deposits and etc. And what about lending? Is that also something? I know
Well, in a
perhaps
way,
there's
it's
no.
kind of this system is a dual opolistic
Yeah.
system, because while you're locking up coins in exchange for yield, it's kind of a virtual lending system where the USD value goes up to the people who have kept their
Um.
coins liquid. So they're not earning yield, but their price is going up over time. So that,
Mhm.
and when they're liquid, they can sell and you can trustlessly sell that, but we can get into that later. There's
Got
other
it.
contracts on the Ethereum blockchain currently that you can trustlessly sell those without having to send them to Coinbase or Gemini to do that. But not just the replacing the products of a bank, but stuff with product market fit, walled gardens. So there's a lot of open source code in crypto, and it's real easy for me to take your product that you just released open source and me just go name it something else with a different token logo
Mm.
and start the same thing. Well, certain things like hex.com are actually licensed. So it's you can view the code, but you can't go copy it without there being some kind of legal repercussion there. So I like that. I like stuff that is being gate kept, quite honestly. I like stuff that when you go to Coin Market Cap or any of these crooked coin ranking sites, that if you're not paying to be if it's a pay to play, if you're not on their exchanges or you're not paying to be listed correctly, they put you back on the third page. And
Mm.
those ones, when you go page 3, page 4, and you see these huge market caps, as long as they got the other things, they're trustless, they're permissionless, they adhere to they're immutable, they're finished products, and you see their market cap so much higher than all the other coins on page 3 and page 4. Look into them deeper, because that's gatekeeping, and that just means opportunity at this point in time. So when that gate does open and the floodgates open, then you're going to already be in that asset before the price runs up.
Yeah, that's really interesting. And that kind of leads to this other question that person has is, what is the best platform, right? Because is all platform does the gatekeeping and does the paid and all that sort of stuff? What is the kind of like the best platform to kind of invest in or invest through, I guess?
Well, so all of these contracts are executable through and I'm talking the Ethereum blockchain right now, because it's the one that's got the most adoption, that has the smart contracts and the tokens built on top of it.
Mm-hmm.
ButtKiss is built on top of Bitcoin. Ethereum actually wanted to be, Vitalik, the original creator of Ethereum, wanted to be built on Bitcoin, and the Bitcoin devs kicked them off. So he said, I'll just create my own coin. So this version 2 of cryptocurrencies was Ethereum being able to run smart programmable money. Essentially, you could program it to do things.
Mm-hmm.
So when I speak about the platform, so to speak, and the systems I'm about to give you, I'm talking on the Ethereum network right now, because that's where all the economic energy is right now. This is where all the real transactions are happening.
Mm-hmm.
So with the advent of browser wallets like MetaMask, you can actually, and be very careful if you guys download any of these, it's metamask.io, metamask.io. There's a lot of fake MetaMasks out there that are scams that look correct, and then they steal all of your wallet balance as soon as you send money to them, because they're wallets with backdoors built into them. So there's a different attack vector. But if you go to something like metamask.io, it is very much trusted in the community, and you can interact with the Ethereum blockchain through like an etherscan.io or directly with the contract. Most of these, be very careful which contracts you're interacting with and what permissions you allow on your wallet. But if you go to the actual official website of the coin project or product that you intend to go to, most of those are very, very much legit, especially if you know who the developer is and you've verified on Twitter and their Telegram and all these different sources that is the same place. Yes, exactly. Like
give them a call.
Yes, right. Call your bank.
Yeah.
So yeah, make sure that you're verifying that the websites that are being marketed by the team are the legit websites before you do anything. There's 100% of the responsibility falls on your shoulders when you're dealing with this kind of wealth mechanism in this financial, or I should say almost monetary unit, so to speak. So make sure you're going to the right places. But there's not like if you with cryptocurrency, since you can't just go buy it necessarily yet, which I know that there's some really great people in politics trying to fix this right now. Currently, right now, you have to go to a licensed exchange that has a money transmitter license, like a Coinbase or a Gemini. And it's a great place to get Ethereum now. And then from Ethereum, you can go into other things. Because that's the gateway. Yeah. So there's a contract on Ethereum called Uniswap, UNISWAP. And if you go to app.uniswap.org, you can actually go to like the front end where you can trade your Ethereum for USDC, which is pegged to $1. It's a stable coin. It's backed 1-to-1. USDC Circle. So it's United States Dollar Circle is what USDC stands for. Circle actually holds a bank account 1-to-1 to back the stable coin. So it's a back stable coin. It's not an algorithmic stable coin, because those can lose their peg and fluctuate to severe degrees one way or the other. In fact, you saw it with Terra Luna not too long ago. So the UST actually lost its peg and literally went to zero multiple times. So you can go down 99%, and then you can still go down another 99% from there. And it did. It lost its peg. So if you're going to transact USDT, also Tether also is backed 1-to-1 with dollars in a bank account, supposedly, plus equities. It doesn't quite have the confidence of the crypto space as much as USDC does, but you can go in and out of coins, and those are good coins that where you can park your gains. If Ethereum runs up and you know it's going to go down, you can park that value in USDC, and then Ethereum goes back down, then you can buy back in lower, and you'll actually be able to buy back more Ethereum than you originally had. So there are some tools like that. The only downside to that is if USDC and USDT don't like the transactions that you've made, or you've interacted with a wallet that's been blacklisted for drugs or money laundering or terrorism or any of those things, USDC and USDT can just yank those coins right out of your wallet. So that's what I don't like about them, is that they have the admin keys in which they can change your balance. So I don't like that.
Gotcha.
But the fiat on-ramps are a good way to get into crypto and a good way to get out. But once you're in crypto, don't leave your money there. Directly interact with the contracts that are going to make you money. Like if you want to swap from one coin to another, Uniswap is a great way to do it. There's no admin keys. It's been deployed. There's no way for them to go back in and steal your balance or take your coins out or interact on your behalf. So it's a very trusted. It's been proven immutable. So that's another, and that's a protocol, which does have its own coin, but that's very speculative coin that I think you'll see gains on it, but there's no promises on that. I have nothing to do with that team. I'm not part of their marketing. But I think there's better products out there that have an actual product use case that isn't just a duct taped token to an exchange that already works with or without the token.
Gotcha. So for a person to kind of rewind back a little bit more, for a lot of my investors, this is maybe first exposure to have with crypto. So we're like the baby steps. And for some of our listeners over here, I think the folks that who kind of logged in, they are already invested in the space. So like in order for me to invest in crypto, basically I need to kind of buy potentially Ethereum, maybe is something that you would recommend it. That I would go from there first. So exchanging my fiat money into that, bought into it. But once I'm in there, I then can use Ethereum to kind of exchange it to other currencies. Is the right way to kind of do it versus using fiat money to pump in more. And sounds like you can't even buy the other things unless if you're buying, you're already holding a cryptocurrency. Like, does Bitcoin work in that case or only Ethereum?
So it's possible to bridge over, as they call it, Bitcoin. You can wrap Bitcoin. All it is you've got the Bitcoin blockchain, you've got the Ethereum blockchain, and then the bridge itself takes and locks up the Bitcoin on one side, and then releases the wrapped Bitcoin on the other side, so that it's redeemable because it's locked on this side. So if I come back to this bridge, I lock up the wrapped Bitcoin and it releases the Bitcoin to my wallet. So there's bridges that locks up one side and releases the other. So it is possible, yes, to go from the Bitcoin blockchain to the Ethereum blockchain. There's also some atomic swap exchanges out there that can pretty trustlessly convert your coins from one coin to another on a different blockchain. But most of anything that your best bet is to just, if you're gonna hold Bitcoin, which I don't, if you're looking to get outsized gains, I wouldn't go there. If you're looking to have a pretty solid and secure store of value that isn't going to, I mean, it's possible to lose 80-85% in the bear market, but if you buy in those bear markets, you'll probably always be up forever going forward. I mean, that's the case in the past. If you look back the last 4 bull bear cycles that we've had with Bitcoin, if you bought at the bottom of the bear, which we're up, I think personally we're almost at the bottom of the bear. I think Bitcoin's going to 12,000-13,000. I just from all the TD sequentials and some of the other things that we're looking at, and then not to mention Richard Hart actually made me aware that there was one of the first exchanges called Mt. Gox has like 140,000 coins it still needs to release. There's close to 110, 120,000 from the Silk Road. The Dread Captain or the Dread Pirate Roberts running Silk Road that the marshals confiscated and are about to hit the auction block. So I think there's a lot of, and we do this every 4 years. If you just back test the chart, you'll see that we correct. Bitcoin corrects about 80%, 85%. And so when you're looking at a $69,000 Bitcoin top a year and a half ago, I think we're still in for a little bit of hurt, but now's a great buying opportunity if you want those stores of value. But I think there's better opportunities in other coins that are legit projects that have dropped 90, 95% over the last year.
Yeah. And then again, it's kind of like it's something that we always promote over here, which is like knowing your goals of investment and you allocate it towards that goal. So as you know, Ken kind of mentioned it before, is like, hey, in order to invest in cryptocurrency, that asset by itself is mostly from investment purposes, is to invest in growth. So why would you then invest in essentially a blue chip stock equivalent into a growth sector and that missing out all the other opportunity? So I think that's kind of summarizes what he's trying to get to.
I don't want to to piggyback off of that. I don't want to turn this into a shill fest by any means, but with Mountain Crypto Advisors, it's literally just a family office. For those who aren't familiar with the term family office, we call it the quarterback of where your legal meets your tax preparation meets your investing. And so we handle the middle, and then we've got some of the best in the industry that handle billionaires' money, multi-million, 100-millionaire, decamillionaires' money. And so we quarterback the facilitating of making sure all three of those entities, whoever they may be, are on your side, making sure that the whole comprehensive plan they're creating will match with the three sectors. And we do a lot of, and it's technically one of the questions you're going to ask, so I'm going to kind of lead you off, I think, on this one. But we roll people out of crypto gains, especially at the top of the market, the height of the market. We roll people into things like real estate for the tax benefits. So real estate syndication deals that we're looking at right now. We've done some opportunity zone things in the past outside of MCA that we're bringing and incorporating into it so that, hold it for 10 years, sell, no capital gains, still get some tax, some depreciation and some tax benefits there as well. But we also have, if you're looking for a more non-growth sector, we can help out with that too, because I think some percentage of your portfolio should be set in something a little safer. So especially like our 100-millionaire, billionaire customer or clients, what we do a lot of is we have a strategy that our advisors are extremely, extremely good at, where they buy and sell puts. We don't do anything with options, but we buy and sell puts, and we're making on average 3 to 5% annually. When you've got $1 billion and all you're trying to do is beat inflation, now you wouldn't have beat inflation this year, but historically, if you're trying to beat inflation, it's a great place to just park money to beat that inflation. But then you can still put your 10, 20, 30% of your money into crypto and look for more outsized gains, and maybe 10% in gold and silver just as an insurance policy. So that's something that our advisors will help you guys figure out. But we do see the need, because I'm not qualified to give that advice, but we do see the need to diversify in certain regards. Absolutely.
Yeah, this kind of brings back to like the conversation me and Ken had. This kind of leads to, we met each other at a networking event, and then I was like, oh, what do you do? He's like, well, we provide these services for mostly billionaires and millionaires that a lot of them are made it in the crypto world. And then so I was asking like, well, you had a growth, like, 30, 100x growth over here on the crypto. Why are you talking
10,000x?
10,000x on the crypto.
We had a 1,000,000% return on much of our clients' portfolios. Yeah.
That's amazing. And but why are you talking to me about real estate, which seems to be compared to that grows a lot slower? And I think Ken, I'll let you kind of talk about that. Is basically, I think accessibility to crypto is an issue, but also if you made the equity in the crypto, it's like, hey, Now where's the cash flow? How do I
Yep.
access the money, right?
Yep.
Other reasons why you're even looking into
Oh yeah.
real estate. And then I'm gonna get into like a very interesting topic that I myself has a lot of questions for as well. Yeah.
Yeah, absolutely. I come from a real estate investing background, very much on the small retail side, the single family homes. I've always wanted to get into multifamily and larger multifamily syndication deals. So
Mhm.
I already had an interest there. But if you've reached some level of, hey, I never have to work again through my investing,
Mhm.
you should still be looking for, and part of, I hate to go back to MCA, but we create these family trusts that will long outlive you for the next 300 years and the
Right.
families that you're going to serve. So we want to help people with generational wealth. And a lot of people want, income outside of crypto. So
Mhm.
when the bear market does come, they don't have to sell their crypto at the bottom.
Mhm.
They still have a cash flow to take care of their bills, their expenses, the things that obviously every single one of us needs every year to survive. Um, but you also want to protect it for generations to come. People want to sit on that money passively and just receive a check. And that's not the way with crypto. For the most
Mhm.
part, it's not very passive. Like
Mhm.
you still have to be the one to go in there and manage the, even if it's just managing a hex stake or making sure to swap it from one coin to the next before, because there's an event coming that buy this, the rumor, sell the news event that the price is going to dump as soon as the event happens. So there's very much active investing in crypto, even on some of the passive side of things. But
Mhm.
you get into a real estate syndication deal, not only can I offset the gains that I've gotten in crypto through depreciation and some of the other benefits, the interest, the mortgage interest, and things of that nature, but I also can have an income from outside crypto. So when the bear market does come, I'm not dependent upon it.
Yeah, that's fantastic way to kind of allocate that. Um, okay, so we did have some audience question over here. This is beyond my pay grade or understanding of crypto, but for the viewer who asked the question, what does the recent changes in Ethereum from proof of work to proof of stake mean? Does it mean it will be less volatile? First of all, can you kind of explain a little bit of what this mean by proof of work or
Yeah.
proof of stake?
Yeah,
Yeah.
before I do that, no. Volatility, until everybody has a wallet, and it is 8 billion people on this, or 8 billion people in this world have a wallet on their phone or on their computer, and they're interacting. It becomes very efficient at that point in time. At this point in time, there's an estimated only 100 million people out there. And as people ebb and flow in these bull and bear cycles in and out, the volatility is not going anywhere.
Mm.
But the volatility is a good thing regardless of proof of work and proof of stake. And I'll get back to explaining that in just a second. That's actually, volatility is the price that you pay for these outsized returns. So
Mm-hmm.
it's because of the
Risk.
volatility.
Right.
Yes, it's the higher risk, but
Yeah.
a higher reward. So
Mm-hmm.
it is literally the price that you pay for these outsized gains. So no, proof of work to proof of stake does not going to change the volatility whatsoever. So the proof of work, what that is, and I don't necessarily subscribe to this mentality, because a lot of it is clean energy mining. Um, um, it's really not a huge percentage. It's less than 1%, I believe, of the world's power usage. And we happen to generate more power than we use in this world anyway, because we're very inefficient at delivering it to homes and businesses that need it.
Mm-hmm.
So I don't necessarily ascribe to this, but there are a lot of people out there that hate the idea of proof of work being, you have to have these super overpowered, specialized chips that can manage and validate these crypto transactions. And it's very heat and energy intensive.
Mm-hmm.
And so there's the argument out there that, hey, it destroys the planet to do this proof of work. Why are we doing that when very efficiently, now that we've got new systems, cryptocurrency 2.0, we can just rotate through node validators on a server somewhere and use fractions of less for the
Mm-hmm.
same kind of protection within the ecosystem. And so some of the Bitcoin maximalists will tell you, no, you have to. It's a proof of work. It's what gives the value to the coin. I disagree with that. I don't think wasting energy to validate a transaction is what gives it its value. I think it's the digital scarcity that I can make sure that the one of 21 million Bitcoin that I own is mine, and you can't take it from me, and you can't. I mean, yeah, within reason, unless the marshals kick down my door and get my private key and decide to auction block that off. But that's another discussion. I think it's the digital scarcity, the rarity, that actually gives it the value. So going back to this proof of work versus proof of stake, we found ways to solve this double spend problem using much more efficient, way less energy consumptive server systems that someone would have to buy, in most cases, billions of dollars worth of the coin in which they could attack the network. So with the proof of work, they call it a 51% attack. It's really only about 30% of the hash power out there being hashed to mine these transactions. If a bad actor came in and could duplicate at least 30% of those of that hash power, they could make it say, no, you didn't spend your coins over there. You spent your coins to this wallet, and they could literally take the Bitcoin. These are socially enforced networks. We'd probably either roll back the chain, or the fork that it created, we just support all the miners going forward, just support the original. So it provides security to the network. That's literally what proof of work is securing the network. Now, proof of stake works very similarly, a lot less energy consumption, but you'd actually have to own so much of the coin, because a lot of these proof of stake systems are delegated proof of stake, and you have to have these node validators that essentially validate the transaction. You have to have a certain amount of the coin staked to the validator to make it a legitimate validator.
Gotcha. Okay.
It's very technical, and I'm probably not doing a great job of explaining it, but it uses a lot less energy. It's much more efficient, and you can have much faster blocks.
So let me kind of try to see if I got this. Like, basically, a proof of work is like in blockchain transaction, etc. It's really an encryption, right? So it's like you want to
both
try
of them
to,
are encryption,
right? But the proof of work is that you actually individually validate every single previous transactions, like making sure you trace down to every single one. So it is energy consumption. No,
because they're both proof of work and proof of stake do that. They both validate every transaction. So many transactions fit within a block. Once that block gets adopted, as long as it doesn't get orphaned and all the other nodes out there validate it, or the other miners validate it, then it becomes a transaction that's forever recorded in time as a transaction that occurred. The proof of work is like me buying. So with a proof of stake, I could have one super powered server that's validating, and it just literally validates transactions for us. Proof of work, I would need a bunch of computers just burning energy at a rapid rate to do the same, essentially the same algorithm that the proof of stake can do.
Gotcha. So it's kind of like,
and the problem here's the big problem with proof of work. So proof of stake is great because any server system out there, as long you want things like redundant. You want redundancy when it comes to power, internet connection, and cooling, to make sure that your server room is up 100% of the time, because you want a blockchain to be up 100% of the time. When you go to a proof of work, you have to pay most of these specialized chips, these ASICs as they call them, action specific integrated chips, these ASIC miners. You have to send your money off to a foreign entity in China most of the time, that you're not even sure you're going to get the equipment, and they're going to use it for the first 2 weeks when it's actually the most productive of the timeline to use those miners. And they're going to mine with them for 2 weeks before they send them to you. So they're going to send you used goods, and you don't even get to talk to the people. There's no customer service, and you may or may not get this mining hardware. But you're not held ransom, so to speak, by the chip manufacturers when you go proof of stake versus proof of work.
So if I may, it maybe it's a really great analogy to say proof of work is basically you try to do it yourself. And then proof of stake, it's like, hey, pay for the big, more super powerful, the specialized worker that does this, right? So like, is that kind of equivalent to that concept?
Yeah,
And then get the
if you're
person
if
who
you mean
does
proof of
get the
stake
machine
being,
that's specialized for this thing versus
well, they're both
doing it.
special for the most part. Actually, the proof of stake, you can use any server system. I mean, you want some high performance equipment, but these ASICs are specifically these proof of work ASIC miners literally solve, it's proof of waste in a way that not just energy consumption, but it literally does calculations that are absolutely no good to humankind.
Yeah.
It's the first miner to solve this complex math equation that solves absolutely no problem is the one that gets awarded the block reward.
The block. Yeah.
Yeah, so it prints more Bitcoin, so to speak. That's where the inflation of Bitcoin comes
Yeah.
yep, into the system, and in return for securing the network and validating transactions. But it literally burns all that energy just to solve something, a math equation that absolutely does no good to humanity. So the proof of stake just validates the transaction. The validator node usually gets some kind of reward for it because you have to have some kind of incentive. Because if you don't get an incentive for validating the transactions and securing the network, no one's going to run it for very long.
Right.
Yeah,
Yeah.
exactly right. So you need that incentive, and both sides have the incentive. Just one of them is just much more efficient, faster way of doing things.
Yeah. Gotcha. Cool. Well, let's move on from this question.
Yeah, sorry.
And
it's a little technical there.
And let's kind of get into a little bit more basic on this. So, how to buy and hold crypto in a secure manner to stop scammers and hackers. I thought that was a very interesting. You kind of touched on this a little bit before, and I have a subsequent question on this related with your comments about someone kicking in the doors. On this.
Yeah, fair enough. Fair enough. So the best way to keep your crypto is in a wallet that you control that is not on a centralized exchange. Celsius, Voyager, one of these others goes down, they take your coins with them. Celsius is in Chapter 11 bankruptcy right now. If you had your coins on there, if they're not your, there's a saying in crypto, not your coin or not your keys, not your crypto. So if you don't hold the keys to the wallet that they're being stored in, you do not control those coins. So even though I think Gemini and Coinbase, I don't believe they're in any kind of trouble, financial trouble, that they're going to have to shut the doors on you. But a lot of people thought that about Celsius and Voyager too, just a couple months ago, and they went to zero and they took their coins with them. So the first thing I'm going to recommend to you people out there, get your coins off of Coinbase, get your coins off of Gemini. These guys are not your friends. The system goes down. Who do you think you're going to contact? Hey, can I please get my coins back? That's not going to happen. So you need to have them in a wallet that you control. To go one step further.
And how do you get that for
like
our novice
Ethereum,
investor like me?
Yeah.
Yeah.
So with Ethereum, I mean, there's wallets that you can safely and securely, like the Electrum Bitcoin wallet is actually a very good wallet that you can, as long as you're not storing your private keys, which is the super secret password, on the computer itself, anything in that wallet on your computer is actually pretty well secured. As long as you're not leaving your password saved to the computer anywhere. That's one thing I see people do all the time, is they have a Word document. Physically write those down and put those in a safe. Do not keep those on your computer. But there's simple web browser, like for Ethereum, the MetaMask.io is a browser extension that it connects via Web3, connects to the website, so you can interact with the smart contracts. But it's also a very secure web wallet. And you never want to transact on a network that you're using Wi-Fi. You always want it hardwired, because too many prying eyes. It's very easy if you have a pineapple. That's what the technical term for a little device that literally breaks Wi-Fi encryptions as you're driving down the street. You're giving people access to your computers and your devices via Wi-Fi. So I recommend hardwiring things. Now, this attack vector is very rare that anyone's ever going to attack you on this. Now, this may become more prevalent as more and more retail investors become crypto investors. And for that reason, I think one of the simplest ways to do that is to put it into cold storage. The way to do that is through a Ledger or a Trezor device. It's a cold wallet. So it's a device I can plug into my computer. I can use the MetaMask interface to connect to it, but the private keys never leave that device. So I have to physically agree to, yes, I want to use my coin. I want to spend my coins, and yes, I approve that gas fee to move my money in and out of a wallet. So, and then that you can put in a super secret, secure place. And then if you ever lose it or it gets broken, if you still have those private keys, you can just order a new one, and it doesn't even have to be the same device. So if you had a Ledger, you don't have to use a Ledger again. You can do it to a Trezor and vice versa. But you type in those private keys, and it'll actually restore your balances on that device. So
Nice.
I
Okay.
recommend, and my favorite is Ledger just because it has a military grade encryption chip that has an ISO standard to it. So it's one of the only chips out there that's for crypto security that is got an ISO standard military grade encryption. Now, with that being said, their customer database did get hacked, and the names and email addresses of people that had recently purchased. I think they're pretty secure now, but who had recently purchased, your name and your address might be floating around out there somewhere. So that's the only downside. But as far as I'm concerned, but for there's ways that you can protect against alien invasion, so to speak, to protect your keys from people. But some of those are very very tech heavy solutions that is not necessarily
The
right
risk again. Yeah, exactly.
yeah most people don't want to become a security expert to deal with crypto, and I get that. There's more important things to do in your day.
Yeah. So what now let's kind of talking about, hey, unless, because you jokingly talked about unless was it FBI kicking down your door, this and that.
Yeah.
Let's talk about legislation. Not to get into political side of things, but what do you think are risks to crypto? And I think legislation should be one of them. But what do you see like some of the risks to crypto, and then how does the legislation perhaps making an impact to that type of thing?
I'll come back to legislation, but I think that the biggest threat right now is bad, not legislation, but bad regulation. So right now, Gensler at the SEC is saying everything except for Bitcoin and maybe even Ethereum is a security. So and since most of the nodes are being validated on Ethereum within the United States, that the United States not necessarily owns Ethereum, but that it falls under their jurisdiction. But it's funny because he's the same guy under President Donald Trump who ran the CFTC and said, and if those of you who are familiar out there, SEC runs securities, CFTC runs commodities. And when he was head of the CFTC, he said, oh, digital currencies are a commodity. So that's actually, I know a lot of well-funded players out there right now are pushing the narrative of that, no, this is personal property. These are commodities. These are not securities. You can call them what you want, but they are commodities. And I think you're going to see, with the exception of some bad actors that the SEC is going after, for the most part, most of these guys are winning their cases against the SEC right now. Ripple is crushing them. Library, which is Odyssey, is crushing them right now. So there's a lot of people out there that think within our industry that we're on the right trajectory there. But when we look back at the legislation, as you first brought forth, we just need better lobbyists, quite honestly. And I know there's some really big PACs out there that are getting a lot of funding. I don't think, because I used to think all lobbyists were bad. Like, we should get money out of the system because it's all of those with the big money that write the rules, and that is true. But if we didn't have lobbyists and good lobbyists, there'd be a lot of misinformed 70, 80-year-old senators and congressmen and women that were going to make some pretty poor decisions. So with that being said, I'm very supportive of some of these PACs and these super PACs that are pushing for, some kind of framework so that we know as we're developing these new tech solutions that we're going to be compliant with future regulations and legislation. But my biggest fear with the legislation side is big players like Coinbase and Gemini and Digital Coin Group and some of these others are going to make it so that they are able to walk through the front door and they're closing the door behind them so that new entrants into the market aren't able to compete. That is my biggest fear with legislation for crypto. I don't think crypto is going anywhere. And even if it did, there's very much a cypherpunk and anarchist philosophy with some of the people that participate that say, good luck, I'll use a VPN, I'll continue to use crypto and you'll never even know. So there's no way, because of the decentralized nature of these networks, that any government could shut down any one of these chains on their own.
Yeah. Now let's time to talk about, we're going to wrapping up this as soon over here. We don't get to ask all the questions we have over here, which I get to ask Ken behind the closed doors. So most of these are my questions. So I can always ask him on that. But, we did have some info, like we kind of talk about fiat currencies and this, that. So there was a news that was quietly dropped into our news, probably earlier this year, a couple months ago, where the Fed kind of talked about, hey, we're going to test digital currency targeting next February or something like that. Don't quote me on this, I can't really exactly remember the date they said they're going to drop it and test it. So that's actually a really big news, because we kind of talked about this in the macroeconomics groups, this and that. I'm sure like crypto people kind of caught it on that too. So currency, digitalize the currency. For the average Joe and etc., they could be confusing this with like, oh, it's a digitalized coin, it's the same as crypto. But fundamentally, they're very different. So how is introducing a digitalized currency going to be impacting, that you foresee going to impacting with the crypto world, and vice versa? Yeah.
It's a double-edged sword. And first, I just want to, a lot of people say, hey, oh, it looks like they're going to move to a digital currency. Well, you guys, we've been a digital currency since computers have been adopted here in America. So the checking account and the debit and the credit cards that you guys are using out there are already ones and zeros on a server.
What you mean? It's not a stack of money that gets translated in wires?
No, it's not the old Wells Fargo days of the horse and carriage carrying a bunch of money in the back and trying to go from bank to bank to supply funds to the individuals. No. So this is just the next step, next level progression. It usually comes to the revolutionaries and the lawbreakers adopt the technology first, and then the rest of the world catches up. So while the whole argument of, well, we're going to create a central bank digital currency so that bad actors can't continue, less than 5% of Bitcoin and Ethereum transactions are actual bad actors, money launderers, people financing terrorism. It's a nonsense argument, but it's the best one they got right now. So it's a good way for them to say, hey, why don't you use our central bank digital currency instead? This central bank digital currency is completely against the ethos of any of these cryptos. And while it's a bad thing in the way that I fear it's going to create a social credit system where, or a voucher system, or both, where you don't agree with the current administration, and they just say, you know what, we're going to turn off the CBDCs for that guy's wallet, and now he can't afford to buy food for his family. They can't afford his mortgage payment because we literally just shut off his ability to use this digital currency that we created. At least now in the current financial system, I can pay in cash. I can find some way to extract that value out of the bank into dollars, or I can go work under the table or do something, and I can at least provide for my family. The CBDC, they're going to literally have, it's the next step of the 1984 surveillance in society, where literally they'll know everything you spent your money on, and there will be no privacy, and they will control whether you get to spend that money or not. And that's very, very tyrannical, dystopian future, and I hope it never comes to that. But the possibility is there, and it's a slippery slope once you start taking that direction. Now, on the other hand, I think it's also a good thing, because people are going to see this crap technology put out by the Fed called the central bank digital currencies, get familiar with digital currencies, and then find out about the real good stuff over here with the speculative value and store of value that can make you 10,000x returns on this other side. So I think a lot of crypto adoption will actually come from it. So, and it's happening. It's going to happen. But going back to that voucher, I forgot to touch on that real quick. Right now, China is working on a CBDC, and it's a voucher system that you don't spend that money. Going back to the Keynesian economic model of velocity of money running through the system, if you don't spend that money this month, it goes to zero. So you better at least spend it, or we're taking it back from you. That's all possible through a CBDC.
Yeah, very much so. Because the money is still, even though majority of it digitalized, but you still can get a dollar bill, right? Like you can get on the streets and be like, hey, give me a dollar.
I can still write a check and not someone at the whatever 3 or 4 letter agency that's watching me specifically can just shut it down that instant.
Yeah.
Like not saying they can't turn off your banking or close your bank accounts on you. Canada just proved they can do that for anyone who is buying trucker sandwiches. So for a freedom of speech and movement
definitely
event that they were doing. So
yeah. So last question I have is blockchain technology. We spend the majority of time talking about the crypto. This is kind of just because in the space, people sometimes confuse blockchain with crypto, but it's entirely 2 different things. So with the blockchain technology, with blockchain technology, what do you see kind of it can revolutionize the real estate investing?
I just see it revolutionizing people being able to use it as another payment form to purchase real estate. So there's no point in using blockchain unless you need censorship resistance. There's nobody in any government that I'm aware of currently at this time that needs to censor my transaction of you and I closing on a deal at the title office when the deal's done. So the only thing that the blockchain is good for is censorship resistance. For people that want to stop other actors from being able to use and spend their money, that's the only thing blockchain is good for, as far as I'm concerned. Until I see a future use case scenario that works in our favor on another level that I'm not thinking of right at this moment, there's no reason for that, because an Excel spreadsheet is the same thing as blockchain. It's just the only difference is that we've got a trusted third-party miner, so to speak, that are validating the transaction between you and I happen, and we can go back and it's got a built-in auditor. That is the thing. That is another beauty of the blockchain, though, is that it has a built-in auditor. Every transaction that's ever been done is there on the digital ledger for you to keep track of. But if you're gonna use blockchain, you got to understand it's slow and it's expensive. So when you say digital currency or cryptocurrencies are different from the blockchain, yes and no. Yes, they're technically, you can have the blockchain, but there's no point in having a blockchain unless there's something that causes or some kind of cost to it, like a coin, to pay for that transaction to be recorded in the ledger forever. Otherwise, people are going to come in there and they're going to spam it with whatever. I mean, they could spam it with kiddie porn or something that I mean, I'm thinking worst case scenario, obviously, but you literally can have a denial of service attack on your blockchain. And then you've recorded a bunch of useless or inappropriate data that does nobody any good. So you have to have some kind of cost associated with it. And that's where the digital currency came into the blockchain digital ledger. So some people will say, well, yeah, but you can tokenize the real estate and you can trade, ownership via this tokenized NFT, non-fungible token that has my address and it's recorded to me. The problem with any of that is that anytime where the real world touches the blockchain, you have to trust that third party and it's immutable. What if that person that is typing into the blockchain misspells your name? And now you no longer have the ability to, at least now there's a way that they just you fill out a legal form, usually with the help of your attorney, and they update the database within the county assessor's office, and boom, now it's corrected. Well, once you make that permanent and immutable on the blockchain, there's no way for it to fix. So until we have a oracle that the information doesn't have to come from the real world to the blockchain, it just goes from one blockchain to another blockchain, or or is part of the blockchain already, that's a misnomer that tokenizing real estate is going to do anything in the way of making these real estate transactions any cheaper or faster, because technically you're still going to need that trusted third party. The whole point of crypto was that you got rid of middlemen. I mean, other than the miners and the validators who are getting compensated to do that, to verify that transaction, wouldn't the whole point of having tokenized real estate to be to get rid of the title office? Wouldn't it be to get rid of the brokers in the middle? Like, it doesn't solve that problem. And then there's too many issues with where the real world touches the data entry into the blockchain. So now I will say there is one particular company that I'm invested in that they did tokenize their offerings, their equity, and it is a tokenized. But that token, it's not immutable, it's not trustless, it's not permissionless. It has an admin key that in case it accidentally gets sent to one person, then they can actually turn that transaction off and then replace in your wallet your tokenized equity. So, but that's not immutable. And in that case, it's really just it's just another way of account for it. But it's, like I said, it's slow and it's costly to put things on the blockchain. So I don't see any reason you would do that at this point in time. Now, on the other hand, we're working with a company right now that has revolutionized crypto payments and can settle $2 cash using a traditional payment processor and settle the sale with no volatility on the crypto side at the moment of the transaction. So I see a value in that. If I want to go in and buy $1 million home in Scottsdale, Arizona, and I'm willing to pay the 3% transaction fee, boom, I can settle in crypto, because there's a lot of people that are having to go crypto to Coinbase to their bank account and then get verified and put it into escrow, and then the transaction goes through the title company. Whereas we can literally do that instantly now through some of the new technologies coming out. So I do see there being some advancements in it being another settlement layer.
Yeah, awesome, cool, awesome. Last question I have is, how does people find about Mom Crypto? How does people find you?
Well, we have it's a community-led YouTube channel. So I just got to warn people right now, you're not dealing with a lot of sophisticated investors on this, but we have a YouTube channel called Discourse Syndicate. So please don't judge us based upon how the community acts. There's a lot of new money individuals, a lot of new wealth individuals, and we know that there's that level of sophistication isn't necessarily there with a lot of those guys. But Discourse Syndicate, we do have, if you look up, just go to YouTube and just look up Discourse Syndicate. The very first playlist that we have on there is our how to download a MetaMask, how to stake Hex, how to buy Hex, how to swap trustlessly on this Uniswap protocol. So we do have some trainings there. But you can find me there, E3 Syndicate. We should be releasing soon, so you should be able to find us there. We're releasing a movie called The Highest of Stakes. We're in the sales and distribution phase right now. It's a 5-time Emmy award-winning film crew. Nice. It's going to be, in my opinion, the crypto movie going forward. So you can learn a lot there. And then we're going to actually put together an education course based upon the blockchain and learning from the basics to how to deal with it. We haven't put that course together yet. It does not exist. For all of you high net worth individuals that need a family office, you need someone to quarterback all of that and can do crypto taxes. That's a big deal. Not a lot of people can do crypto taxes yet. MountainCryptoAdvisors.com. And then hopefully soon next year, we'll have a Hex investment trust. It's in the private stage right now. Hopefully we'll go live, we'll go public on NASDAQ with an OTCQX listing.
Nice. A lot of great things that you're doing, Ken.
We got a lot going on.
Yeah, and it is so good to kind of have you on our site, have it on our webinar. And guys, definitely this is a great information crash course into crypto. And of course, like any education, the paid education is always better. So even though Ken's course is not available yet, but I would, if you're serious about the cryptos and etc., I would definitely kind of really investing time and investing into your own educations and getting into some really good quality education before you're like a 99% out of the people out there mining crypto. Really kind of like unknowingly invested. We're always kind of believing in that, going in with your eyes wide open, and then protecting your money. Well, thank you so much. That's it for today. And we're logging off over here. And for the people who's consuming the recording, we thank you for this webinar. Thank you, Ken. Yeah.
Thank you.
Okay. Great. I'm gonna close here.